What's going on, everybody? Um, just wanted to come on and do a daily video. I recorded my session this morning. Unfortunately, I did not keep up with my Adobe license, um, and that's where I edit all my videos. Um, so I gotta get that turned back on, and then it'll probably take me a couple of days to actually edit the video. Uh, I don't usually edit my YouTube videos, but I recorded for a little over 2 hours. Um, Ended up taking two trades, um, and there's a lot of downtime in the video, so I just want to cut all the downtime out and condense it into, um, my market commentary because I talk out loud when the market is open a lot, even in the live sessions with people in there watching. So unless they have a question or comment, um, I'm pretty much doing all the talking. Uh, so yeah, so I wanted to come on and make this video just to show everybody today's action before I start getting the uh, live sessions edited and put out. Okay, um, which I don't want those sessions going out the very same day. Um, I'm not doing live on YouTube. I'm just live in my private Discord that has a handful of members. Uh, so I wanted to go over today's price action uh, in the pre-market. uh, I was just kind of watching price, and we had created this order block. Okay, and the reason I liked this order block is that it was mostly one candle. Okay, um, and in fact, yeah, mostly one candle that made this order block. Okay. Um, and then we pushed into it, pushed up to the halfway point, and started falling off. But we couldn't break this low, creating a lot of liquidity down here. So, like, we had this push below the SMAs, and then we pulled back up, tapped the midline, came back down, had another strong clearing candle that didn't break the lows. We made a double bottom here. But what I was looking for before I get to the actual trade is I had marked out, uh, from the overnight, the uh, Asia low was down here. The London low was down here. So London did not break Asia's low. But the way it was looking, uh, so I had this marked as sell side liquidity. We had a double bottom here with some fair value gaps that could be cleaned up. I think it was one good fair value gap on the 5 minute there um, to be cleaned up. So once we uh, had the first push down, tapped back into almost the midway point, but held the 200, came back down, made the double bottom, pushed back up again. Uh, then I was looking for a spot to get in. Okay. Um, but as you can see, all this push up pulled the 9 above the 21. This push up pulled the 9 above the 21. This push up did not get far enough to get the 9 above the 21. Okay. And then we had another strong candle back through the SMAs, heading for these lows. So this is where I got in. Okay. Um, and that's, to me, that's just kind of an indication. Take that off. Take that off. Since I moved it, I don't know where it was. This was the 5 minute range, 5 minute opening range, those two purple lines. But to me, that's just an indication of the weakness, right? Um, if you watch the nine, we made lower low here, right? So we pulled down, had a push up, but it didn't get the nine above the 21. Okay. Then we come down, sweep the low. Then we get a push up that's strong enough to actually pull the nine above, but we hold the 200. We come back down, we push up again. The nine still crosses the 21 down here. So on this pullback, I'm not real interested in getting into any shorts. Okay. And then we come back down again, hit here, and on the next push up, we have this weak push up again, like this one, where the 9 doesn't cross the 21. And then we have a strong candle back through the SMAs heading for those lows again. That's where I got in. Now, it did take one more push back up, and because this push up lasted so long, the 9 actually came up above the 21. But we made our double top right here for use later. And then we pushed down, came back one more time, made a triple top, and then finally fell over at the open. Okay. Well, 8:30 on this one. Okay. Um, I forgot the opening trade was up here. So pre-market, we fell over, and I was looking for, price to take the London low uh, at that double bottom over here and clean some of this up. I actually expected to wait till the open to do it, but it actually did it about 20 minutes before the open. And then we started just to go straight back up, uh, heading towards the open. And the opening candle was a very strong up candle. Now, I didn't get in here because what I was waiting for here was the 5 minute opening range. Okay. And let's get into that. So on the 5 minute chart, this was the 9:30 to 9:35 candle. Okay. As soon as before this candle closes, I know this is going to be the 5 minute range low because price getting uh, close to the uh, close to the end of the 5 minute candle was way up here. So I went ahead and put the top on the range as well. And if it moved up and closed above that, then I just moved the line. But these two purple lines are a 5 minute range. Okay. So immediately I drop to the 1 minute chart and I'm looking for the first fair value gap outside of uh, the 1 minute or outside of the 5 minute opening range, right? And we made that fair value gap right here, right below a descending 21. Or, wait a minute, what is that? Oh, never mind. It's a call out box because that's the 21, that's the 9. So an ascending 9 and 21 that has broken above the 200 and made our first fair value gap. So as soon as this red candle closes, that's where I'm entering the trade. Okay. Wait a minute. No, that was up here. This one. This red candle here closes. We made our gap. I mark it in right there. Okay. My stop is below the body of the very first 5 minute or very first 1 minute candle to break outside of the 5 minute range, which was this candle. So I think I pulled it down just because we had this inverted fair value gap. Um, but it didn't matter. I mean, we never came down. Uh, we made a double bottom on the very next candle after entry, or the two candles after entry, and it just took off from there. Now, my target obviously was the previous day's high and the top of the 4 hour DTR or dealing range. Okay. I could have probably held on to that and seen the retest and then a color change off the 9 at a retest of the all-time high and previous day's high. Um, but being those two levels, if it was a liquidity sweep, I didn't want to lose much. This is only about a $450 trade because I did not add to it. Um, so I just took the profit there. On top of that, it gave me my $1,000 profit mark for the day. Um, and I had work to do. I had to go pick up a load and get an hour or two down the road before I stopped for the day. So I just called it a day right there. $1,000 profit over the last 6 days. We're up $4,000. Okay. Now, this trade, like I said, I could have held onto it and seen what happened here. Um, and taken it up to the envelope high. Would have been a huge trade. Um, well, I mean, I made 550 here, so it would have been about $1,000 trade. Um, but again, on the 1 minute, when we got to the all-time high and the previous day's high, we broke above, wicked, and closed back below. So that very easily could have rolled over and took a lot of my profit very quickly. Um, if there was some really, really strong orders up here to flash it back down. So I'm very happy with taking my profit there. I don't care about this. Like I said, I mean, I made $1,000 on the day. Um, so I, I have no problem with it whatsoever. Um, so as we watch price action, we run up and we actually break outside uh, the envelope. Now, I have said that, this can break outside every once in a while. I haven't seen it happen too much. If you put the envelope on your chart and you look back through price, it doesn't break through very often. And when it does, usually doesn't last very long. Okay. So we came up to this daily and made the high of day, right? Uh, then we pushed back down and we got back into the range. And we slowly built our way back up to that area, to that daily pivot point, and we swept the current day's high. Immediately pushed back down below the daily pivot point, another test here. And now if, when was that on? Just 1 minute. Sorry, just kind of uh, checking things out. I didn't take any more trades uh, today. Okay, this was it. Yeah, I don't know why I didn't. Oh, these trades here. Um, After swiping the high of day and being close to the top of the envelope, but not being able to close above that daily pivot point, I would have been looking for a place to enter short if it got back below the SMAs. And that happened right here, um, risking that candle, because that is basically just a clearing candle that cleared all of these lows and closed below them. Um, and that came really close to coming back and stopping me out, or would have come close to stopping me out, but it actually would not have. And then it falls over, and you're just looking to take it back to the midline. Okay. Um, we bounce off the midline. You could have taken this trade here when we tagged the midline, because if you look at the day since the open, okay, we're at a very nice 45-degree trend angle here. Okay. Uh, so I literally would have marketed into this order when it touched the midline, giving myself below this fair value gap, okay, as my stop. Uh, or you could wait and get the color change, last down candle, and then a strong up candle that breaks even the high of the color change candle, right? Now you're not back above both SMAs yet, but I'm willing to take that risk on the color change that we are going to go higher because of the state that the 200 moving average is in. Okay. So even if you waited till you got in up here and you just targeted back to that daily pivot point again, um, I mean, you had almost a 3-to-1 trade there. Okay. And you actually had a good add as well if you wanted it when you color changed or bottom tail barred off of the 200 again to make a higher low. Okay. Um, and that would have been very close to your original entry on them. And you could have pulled your stop up here. You literally would be risking less with twice the amount of contracts than you were with the first two contracts. Uh, and it just takes off. Okay. And now you're double your contracts up here. I think this was around a $600 or $700 trade with 20 contracts. No, we're not taking 100. Okay. Um, yeah, it was a $700 trade. So you would have had close to a $1,400 trade uh, if you had taken the ad there off of the 200. Okay. Probably about 1,000 to $1,200 trade if you waited for the color change off of this red can or this red candle here. Okay. Um, and you didn't get that color changed over here anyway, which breaks that candle as well. So you could have added to the trade any of three spots. Um, so then we come back up and we hit uh, the high of day again and that daily pivot point. Well, we reject it again. And we come down and we're just consolidating, consolidating, consolidating. And what this consolidation does is gives us a good Oliver Velez entry. Because at this point, the 21 and the 200 are in a narrow state. Okay. So I'm looking for an elephant candle. Uh, I could have gotten in on this candle here, uh, which not really an elephant candle, but it is a bear 180. I mean, price was dead stop for 4 minutes at this 370 75. And then we got our bare 180. You could enter right there. Um, and that would be a better entry. Or you could wait until you start clearing some of these lows down here. And that happens on this candle here. So you could hit market as soon as you clear these lows here or this low here, wherever you want. You got multiple entry spots for this trade. Okay. Now, when that trade comes on, where am I looking to go? Well, this push down didn't quite get into this fair value gap. So I'm looking to trade to the midline of that fair value gap. And that's a 3.3 to 1 trade. Okay. Um, and I didn't hold through. This became an inverted fair value gap that never got retested. Uh, and we fell to the bottom, bounced up to the 21, and we actually broke through again here, cleared out this fair value gap, went into the discount range of this quadrant, this top quadrant that we have from our previous dealing range, which we will have to expand now, um, and then pop back up for the end of day. So I don't know if it's going to move very much from here for the rest of the day, but let's just take a look real quick and pull all these trades up. And if you took each of these trades, which I like to get in, the majority of my trades, I like to go in with um, 2 minis. Okay. Uh, so this first trade, uh, 5, 20, risking 325 to win 750. That would have been nice. This trade that I had on, this is one of the first trade I took. If I had not taken partial profits, it would have been about almost a $900 trade. It's like 880 something. I ended up taking partial profits, and I think I'm going to stop doing it unless I get to $2,000. Then I'll lock in 1,000 and see if it runs any further. Um, so this trade could have been $750. Okay, let's break out the calculator, and we got $750 on that first trade. Okay, this is entering with two, not moving your stop. It works or it doesn't. Okay, 750 there. Next trade, 20 contracts, risking 250 to make 625. Right? Plus 625 equals next trade. 17, 18, 19, 20. Risking 225 to make 650. Plus 650. Next trade. That is actually a very plausible um, trade one way and then switch to the other. Would I have actually taken both trades? Probably not. I just want to show the amount of money that was available if you took the trades the way you're supposed to. This is just as much for me as it is anybody else. Okay. Um, Here we were risking more than that. Move the stop to make 725. 725. Last trade of the day, risking 200 to make 675. Plus 675. So there was a total of $3,400 to be made today. Okay. Um, Obviously, nobody needs to catch all of them. Okay. Um, Take the ones that look the best to you. You know, these two trades here, maybe, well, the up trade, yes, off the midline. The down trade, maybe not. This trade was a definite yes. The opening trade was a definite yes. This trade, I had my theory and it worked out. Um, so really, this one is the one that, maybe I probably wouldn't have taken. Okay. Um, but I mean, that would still take $700 away and you're still looking at 2,700 dollars on the day. Okay. I made 1,000. So I missed out on this trade and I missed out on this trade, which would have been uh, nice. Another $1,400, $1,500. So that was today's price action. Very nice price action to trade. Um, I mean, everything went really smooth. Everything looked really good. I was able to spot everything easily. The only thing I missed was, maybe holding on to this trade longer. Uh, but again, I'm happy with it. I'm not worried that I didn't. It's just something maybe I look for in the future. Um, I mean, if that's two contracts, take one off. Lock in the 250 and then set a really tight stop loss uh, inside that candle and see what happens. Uh, so that was today's price action. I'm looking forward to start uh, getting out the recordings of my live trading. Uh, Again, I got to get Adobe set back up. That actually might take a couple of days um, because I'm going to look at the subscription models, uh, and I'm going to have a pretty good paycheck this week. So I may purchase it for a year instead of just monthly. So I'm probably going to wait till you know, Thursday night or Friday to get that uh, Adobe license back. So it'll probably be next week before I start getting my live recordings um, posted up onto the channel with all the commentary. So hope you guys enjoyed the daily review. They will certainly start being a lot nicer when I uh, get my editing software and start just posting the live trading. So, and I know I need to get another microphone as well because this one just sounds horrible. But we'll look into that. Until next time, we're going to cut this off at 30 minutes. We will see everyone tomorrow morning for Tuesday trading. Fed Chair Powell is going to be talking tomorrow, so watch your positions, and we'll see you then.